Diodes Incorporated. This company has been on my radar for a little while. As I research this company, I have also gone ahead and fed ChatGPT with this information in order to provide my followers and copiers with an overview of the research I'm doing. Bear in mind that the rest of this post was generated by AI based on my research as well as company financials. Diodes Incorporated. Diodes Incorporated is a semiconductor manufacturer and supplier that operates in the global electronics industry. Diodes Incorporated primarily specializes in the design, manufacturing, and distribution of discrete and analog semiconductor products. These components are widely used in various electronic devices and systems, making the company a key player in the semiconductor industry. The company offers a diverse range of semiconductor products, including diodes, transistors, voltage regulators, metal oxide semiconductor field effect transistors, and other integrated circuits. These components are crucial for a wide array of applications, including consumer electronics, automotive systems, industrial equipment, and more. Located in Plano, Texas, United States. Key people: Keh-Shew Lu, Chairman, President, and CEO. Dr. Keh-Shew Lu holds a bachelor's degree in electrical engineering from National Cheng Kung University in Taiwan. He also has a master's degree and a doctorate in electrical engineering from Texas Tech University. He has been awarded an honorary doctorate in engineering from National Cheng Kung University. Dr. Lu began his career at Texas Instruments in 1974. Over the years, he served time in various managerial and senior executive capacities, including Senior Vice President and General Manager of Worldwide Mixed Signal and Logic Products. Dr. Lu joined the board of directors of Diodes Inc. in 2001 and was appointed President and CEO in June 2005. Under his leadership, the company has seen significant growth. When he took over as CEO, Diodes had a revenue of about $186 million and a market cap of $159 million. Dr. Lu committed to building the market cap to $1 billion in 5 years, which he achieved in 2010. He also aimed to build the revenue to $1 billion in 10 to 12 years, which he achieved in 2017. Industry experience. Dr. Lu has over 40 years of experience in the semiconductor industry, particularly in various managerial and senior executive capacities at Texas Instruments. Strategic acquisitions. Since 2005, Diodes has acquired 9 companies or divisions that have expanded its product offerings, global presence, and manufacturing footprint. Financial performance. As of 2022, the company's revenue is on a run rate to reach $2 billion for the full year, almost doubling since 2017. Management philosophy. Dr. Lu has been influenced by Morris Chang, the founder and former chairman, CEO of Taiwan Semiconductor Manufacturing Company. He emphasizes setting clear directions and goals for his team and driving them to accomplish those goals without accepting any excuses. With cash and cash equivalents of $322,000, the company appears to have sufficient liquidity. Risk factors. The company has grown through acquisitions, which could present integration risks. Past acquisitions. ZX Semiconductors. ZX's expertise in discrete semiconductor devices could have been integrated into Diodes Incorporated's existing product lines, enhancing their technological capabilities. ZX's strong presence in the UK and European markets could have provided Diodes Incorporated with a strategic advantage in these regions. The $176 million acquisition cost would have been a significant investment for Diodes Incorporated, requiring careful financial planning and risk assessment. Integration challenges, cultural differences, operational alignment, and financial integration would have been key areas to focus on post-acquisition. Pericom Semiconductor. Pericom's range of digital, mixed signal, and frequency control integrated circuits would have complemented Diodes Incorporated's existing offerings, creating a more diversified product portfolio. Pericom's focus on data center, telecom, automotive, and consumer electronics could have opened new market segments for Diodes Incorporated. The financial aspects of this acquisition, including the cost and how it was financed, would have been critical for Diodes Incorporated's overall financial strategy. Operational alignment, post-acquisition, integrating Pericom's operations, technology, and workforce would have been a complex task requiring careful planning. Forward expectations for Diodes Incorporated. Guidance from earnings reports. Revenue for the third quarter of 2023, the company expects revenue to be approximately $425 million, plus or minus 3%. GAAP gross margin expected to be 40%, plus or minus 1%. Non-GAAP operating expenses expected to be approximately 23% of revenue, plus or minus 1%. Net interest expense expected to be approximately $1 million. Income tax rate expected to be 20%, plus or minus 3%. Analyst forecasts: FY 2023 EPS $6.10. Consensus analyst price target: high prediction $120, average prediction $100.60, low prediction $85. Current stock price $74.71. The company expects a revenue of approximately $425 million for Q3 2023, which could be indicative of stable growth, especially when considering the broader market conditions. The guidance on diluted EPS of $6.10 for FY 2023 suggests a positive outlook. With a current stock price of $74.71, the analyst price target suggests significant upside potential, with the high prediction reaching $120. The expected GAAP gross margin of 40% is a critical metric, as it can impact the company's profitability and, by extension, its EPS. The company aims to reduce channel inventory due to slower recovery in consumer, computing, and communications markets, which could be a prudent move to manage costs and improve operational efficiency. It appears that Diodes Incorporated is on a stable growth trajectory for the near term, with a positive outlook on profitability as indicated by the EPS forecasts. Let's delve deeper into the key financial metrics for Diodes Inc. over the last 10 years. In-depth analysis of key financial metrics. The net income has shown significant volatility over the years, but has been on an upward trajectory since 2018. The sharp increase in net income in recent years, particularly from 2021 to 2022, suggests that the company has been able to capitalize on market opportunities and improve its operational efficiency. The dip in 2017 could be indicative of a challenging market environment. Similar to net income, EPS has shown considerable fluctuations but has been on an upward trend since 2018. The EPS is a direct reflection of the company's profitability on a per-share basis. The increase in EPS, especially in 2021 and 2022, is a positive sign for shareholders and indicates strong financial health. There has been a steady increase in total current assets from 2018 to 2020, with a slight dip in 2021. The increase in current assets suggests that the company has been accumulating more short-term assets like cash, accounts receivable, and inventory. This could be indicative of strong sales performance and effective working capital management. There was a significant jump in current liabilities from 2019 to 2020, followed by a slight decrease in 2021. The increase in liabilities could be due to short-term borrowings or accounts payable. The slight decrease in 2021 suggests that the company has started to manage its short-term obligations more effectively. The cash ratio has fluctuated over the years, hitting a low in 2020 before recovering in 2021. The cash ratio is a measure of a company's liquidity and its ability to cover short-term liabilities with cash and cash equivalents. The low ratio in 2020 could indicate a liquidity crunch, but the recovery in 2021 suggests improved financial stability. Long-term debt decreased significantly in 2019 but increased again in 2020 and has been relatively stable since. Diodes Inc. has shown resilience and adaptability. The company has managed to improve its profitability metrics while also focusing on effective asset and liability management. However, it's crucial to keep an eye on the cash ratio and long-term debt, as they can be indicative of the company's long-term financial stability. The year 2017 was an anomaly for Diodes Inc. in terms of financial performance. The company reported a negative net income of minus $1.81 million, which is a significant deviation from its usual profitability. This was reflected in a negative diluted EPS of minus 4 cents. The company's liquidity also seemed to be under pressure, as indicated by a lower cash ratio of 0.82 and a current ratio of 2.68. These ratios are below the company's historical averages, suggesting that the firm might have faced challenges in meeting its short-term obligations. Retained earnings were relatively stable at $532.69 million. The interest-to-profit ratio was at 3.36%. A deeper look at 2017. The Tax Cuts and Jobs Act led to an approximately $46 million increase in GAAP tax expense, which significantly impacted the net loss for the year. Despite the tax impact, revenue grew to a record $1.5 billion, an 11.9% increase over 2016. GAAP gross profit was a record $356.8 million, and non-GAAP gross profit was $359.5 million. GAAP net loss was $1.8 million, or 4 cents per diluted share, compared to a net income of $15.9 million in 2016. Cash flow achieved $181.1 million in cash flow from operations and $70 million in free cash flow. However, net cash flow was negative $44 million due to long-term debt paydown and stock buyback. The significant tax expense due to the Tax Cuts and Jobs Act was a one-time event that severely impacted the net income for 2017. This was an external factor and not indicative of the company's operational performance. Despite the tax hit, the company showed strong operational performance with record revenue and gross profit. This suggests that the core business was strong. The negative net cash flow was primarily due to the paydown of long-term debt and stock buyback, indicating a strategic use of cash rather than operational inefficiency. The company was focused on expanding market share and transitioning to higher margin products, which is a positive sign for long-term growth. The company has continued its trajectory of revenue and profitability growth, as seen in recent financials, indicating that the issues of 2017 were largely circumstantial and not structural. The one-time tax expense has not had a lasting cash impact, allowing the company to continue its growth strategies. The focus on higher margin products and market expansion has likely contributed to the company's strong performance today. The company's current financial metrics, including EPS expectations and analyst price targets, suggest that it has recovered well from the setbacks of 2017. With a full year 2023 EPS estimate of $6.10, Diodes Inc. has a forward PE of 12.2 and a trailing PE of 10.4. The 10-year median PE ratio has been 18.73. Since 2017, the median PE ratio has been 15.2. Summary: Diodes Incorporated, headquartered in Plano, Texas, is a leading semiconductor manufacturer specializing in discrete and analog components, serving diverse sectors like consumer electronics and automotive systems. Under the leadership of Dr. Keh-Shew Lu, who has over 40 years of industry experience, the company has seen significant growth, achieving a market cap of $1 billion in 2010 and revenue of $1 billion in 2017. Dr. Lu's management philosophy emphasizes clear goals and has been influenced by industry stalwarts like Morris Chang of TSMC. Financially, the company is on a run rate to reach $2 billion in revenue and expects a Q3 2023 revenue of approximately $425 million. It has also made strategic acquisitions such as ZX Semiconductors and Pericom Semiconductor to bolster its product offerings and market reach. The company's financial metrics show an upward trajectory in net income and EPS since 2018, although there was a dip in 2017 due to a one-time tax expense. Current analyst forecasts suggest a positive outlook with a full year 2023 EPS estimate of $6.10, and the company's liquidity appears sufficient with cash and cash equivalents of $322,000. With a forward PE of 12.2 and a median PE of 15.2 from 2017, there may be a 24% potential gain on a small investment. Considering the financial strength of the company and management's ability to weather difficult periods in the past, I would consider this a moderate buy. That concludes this analysis for now. I hope you found this useful, and feel free to comment your thoughts below.